So, are we live? Are we live? Just let us check. Are we live? Are we live? All right. So, hello everyone and welcome back to yet another very exciting session. This is your friend CA Ishan Gupta. Let us begin our session. In this session today, we are going to talk about what? We are going to talk about Finance Decoded. We are going to talk about what? Finance Decoded. That is the current affairs for January 2024 edition, the current affairs introduced by Reserve Bank of India. And let us begin. Let us begin our session now. So the first report for this is RBI report finds debt fund AUM of rupees 1.7 lakh rupees in stress. So what is ultimately debt fund? What is AUM? So all the students or all the friends who have joined and are not of commerce background or do not have a fine understanding of the financial activities, let me explain. So mutual funds, there is a financial instrument by the name of mutual funds. So what is mutual funds? Mutual funds, ultimately what does mutual fund do is they take your money. So let me explain through a diagram. So mutual fund, what a mutual fund does is they take your money, they take the money of the investors and they invest the money in the market. Market being a share market, equity market. It can be a debt market, it can be foreign exchange, there are many types of markets, and ultimately they issue ownership, that is units, to the investors. As and when they get the returns, as and when the mutual funds get the return, they ultimately pass on such returns to who? To the investors. So mutual funds are something like an instrument. They are professional people who are managing your funds on your behalf, and they're investing your money to a specified asset class. So ultimately that is mutual categories. Mutual fund भी बहुत तरीके के होते हैं, मतलब ऐसा नहीं है कि एक ही तरीके का है. There are various categories. In this particular scenario, when we're talking about debt fund, then the mutual funds are investing our money into debt instruments, hence the name debt funds. So ultimately the RBI report is talking about debt funds over here, that is those mutual funds who are dealing with debt schemes, that is they are investing your money into debt instruments. What is AUM? AUM means assets under management, that is what volume of money the mutual fund is managing. For example, if we invest in the investors, for example me, myself and other investors are investing 1000 crore rupees into a mutual fund, so ultimately these 1000 crore rupees would be managed by such mutual fund. So the AUM, what is AUM? Again, the assets under management would be 1000 crores. So this report states that the study conducted by SEBI, Securities Exchange Board of India, has revealed that 1.7 lakh crore of assets under management, that is the value of money that is being managed by such debt funds, are in stress, that is of open-ended debt schemes of 17 mutual funds were under stress as of September quarter. What is open-ended schemes? So what is open-ended schemes? So what is ultimately, there are various types of schemes that mutual fund introduce. One being the debt fund that is they take our money and invest in debt securities. What is open-ended scheme? There are two types of broad schemes over here. One is close-ended schemes and one is open-ended schemes. So in open-ended scheme, at any point of time investor can come in and invest their money. मतलब इसके अंदर होता क्या है कि आपको अगर आज इन्वेस्ट करना है, आज इन्वेस्ट करो, वो आपका पैसा लेंगे, डेट के अंदर इन्वेस्ट करेंगे, वहां से रिटर्न आएगा, चलता जाएगा. इस तरीके से काम करते हैं. मतलब ओपन एंडेड स्कीम का मतलब दैट द म्यूचुअल फंड विल कंटिन्यू एंड इन्वेस्टर्स कैन कम इन, बाय द यूनिट्स ऑफ सच म्यूचुअल फंड एंड दे कैन लीव एट एनी टाइम. The analysis revealed stress in case of 17 mutual funds, that is stress meaning that they were under a certain kind of risk. And in terms of schemes, however, only 24 out of the 299 schemes exhibited stress as per the financial stability report. So this showed that out of 299 schemes which we are talking about, only 24 showed stress. Next, the survey details. What were the survey details? The survey covered a total AUM, that is asset under management, of 12.4 lakh crore. So ultimately, when such surveys are being done, they cover a large proportion of samples, a large proportion of the population. So under this, the population contained a total AUM of what? 12.4 lakh crore rupees. Out of this, they are saying that 1.7 lakh crores they found to be under stress, with 1.7 lakh crore being stressed AUM in open-ended scheme. So again, there is again mentioned open-ended debt schemes, not equity, only debt they are talking about over here. So stress testing, how is stress testing done? Asset management companies must stress test all open-ended debt schemes monthly as per required by SEBI. So what is ultimately, they have certain parameters that need to be followed, under which they test the assets whether they are financially risky or not. Risk evaluation is done. Ultimately, stress testing assesses the impact of various risks, including liquidity risk. What is liquidity risk? For example, the money that mutual funds invest in such securities. The money that mutual funds, what we are talking about here, is investing in debt securities. So how much the debt, the instruments that in which the mutual funds are investing, how much are they secure? भाई मान लीजिए मैंने अपना पैसा, मैं म्यूचुअल फंड हूँ, मैंने अपना पैसा कहीं पे डेट के तौर पे दे दिया, ठीक है ना, अब वहाँ से पैसा वापस भी तो आना चाहिए, और अगर मेरे को वो बेचना है, अदरवाइज इफ आई वांट टू सेल दैट डेट इंस्ट्रूमेंट, इज देयर अ रेडी मार्केट फॉर सेलिंग दैट डेट इंस्ट्रूमेंट? So liquidity risk, how matlab the instrument, how quickly can it be converted into liquid, that is cash, bank or equivalent form, which involves evaluating redemption risk, that is whether there would be a default risk or not at the time of maturity. For example, I am mutual fund, again I am investing my money in the debt securities. At the time of maturity के time पे ऐसा तो नहीं कि भाई पैसा ही ना मिलेगा वापस. तो redemption risk, liquidity risk, all these type of risks are evaluated properly over here. Next, liquidity risk management for open-ended debt schemes. Liquidity risk management includes redemption at risk, conditional redemption at risk, which must stay above a certain threshold. So ultimately, we talked about what is redemption risk. That is, again let me repeat, the mutual funds invested in certain debt instruments, that is debt securities, whether such debt securities at the time of maturity would redeem the value or not, whether the value is secured or not, we are talking about. AMCs perform monthly back testing of these ratios. Note, what is open-ended scheme? Open-ended mutual fund schemes have no maturity or lock-in period. So ultimately, the investor invests the money in mutual fund and there is no maturity or lock-in period. There is no maturity or lock-in period. Ultimately, allowing investors to buy or sell units on any working day without any restrictions. So ultimately, once the investor is investing his money into this, units can be allotted at any point of time. There is no keywords, no maturity. Any point of time you can invest, any point of time you can sell the units of the mutual fund, and no minimum lock-in period is there. For example, lock-in period can be in some instruments, when you invest your money, they can be lock-in period of 8 years, 15 years and so on. So there is no lock-in period in such open-ended mutual funds. Next guidelines were issued, that is RBI issues guidelines on bank classification on unclaimed deposits. So what is basically unclaimed deposits? There are two major definitions that would be covered over here. Let me bring the definitions first. So here are the major definitions. Let me first explain you the definitions, then we would be talking about the guidelines that RBI had issued in January or 24. Let me first introduce you with the that major definitions. First is the inoperative account, a saving or current account with no customer initiated transactions for over 2 years. So ultimately there are several guidelines that RBI has given the banks. For example, if today I open a bank account, that is a savings account by my name, that is Ishan Gupta, and I do not do any transaction that is neither inflow, neither outflow, no transaction in that account for 2 years, so accordingly it becomes an inoperative account. So such accounts are being classified as inoperative accounts. There is another definition, that is unclaimed deposits, deposits not used or claimed for 10 years or more. So ultimately deposits that are not used for what, 10 years or more, as specified in DEA fund scheme 2014. That is, again let me give you an example. For example, there is a bank account. I have a bank account. I had I had deposited certain money. For example, let's say 10 lakh rupees. 10 lakh rupees, and such deposit are not used or claimed by any person for 10 years or more, then such deposits can be classified as unclaimed deposit. Unclaimed deposit. Who has to do so? The banks have to do so on the guidelines issued by the Reserve Bank of India. So ultimately these are the two major definitions that are covered over here. Let us now come back to the guidelines that were issued. This move comes after RBI launched the 100 days 100 pays campaign in June last year. So there was a campaign in June 2023, 100 days 100 pays, under which the banks must trace and settle top 100 unclaimed deposits of every bank in every district. So ultimately, according to this campaign, the top unclaimed deposit being the deposits that we have made, we just understood. अभी क्या समझा भाई, अनक्लेम्ड डिपॉजिट क्या समझा हमने ये समझा वो डिपॉजिट जो हम करके भैया 10 साल से ज़्यादा हो गए, नो वन इज यूजिंग सच डिपॉजिट्स, दैट इज नोन एज अनक्लेम्ड डिपॉजिट्स. सो अंडर दिस कैंपेन बैंक्स हैड टू ट्रेस एंड सेटल top 100, that is top 100 by maybe the value of the deposits, unclaimed deposits of every bank in every district. The deadline of this scheme, which was to end on 8 September, has now been extended to 1st April 2024. So this notification or guideline basically deals with that it has been extended to 1st April 2024, that is the beginning of the new financial year. Key highlights of the news. Under the new guidelines, RBI said banks shall undertake at least an annual review in respect of accounts where there is no customer induced transaction for more than a year. So ultimately this is talking about what? Inoperative accounts. They're talking about inoperative accounts where there is no customer interaction or induced transaction for more than 1 year. Then they are saying that annual review should be done. So banks should do annual reviews. They should be, you must have heard about KYCs, know your customer approach. So they are continuously updating the profiles of their customer, knowing more about their customers and keeping their accounts operative. In cases where there is no explicit mandate to renew the term deposit. So what is the term deposit? So broadly classifying, there are two types of deposit. For example, I go to the bank and I deposit some, for example, again 10 lakh rupees I deposit with the bank. So there are two types of deposit. One is the demand deposit. And the other is the time deposit. So what is the demand deposit? Demand deposit is ultimately I deposit my money with the bank, and whenever I require the money, I can take it out from the bank at any point of time. जब मेरे को पैसा चाहिए मैं वो निकाल सकता हूँ. Examples can be savings account, the amount that I've deposited in the savings account, and the current account. The other is time deposit. The other is what? Time deposits, where I give my money to the bank, and after the passing of certain time period, only after that I can claim my money. You can keep in mind example of fixed deposits. RD, recurring deposits. So under this I give my money to the bank for let's say 1 year. I incur a fixed deposit of 1 year. एक साल तक भाई उनको पैसा दे दिया. अब after 1 year I will get back my money along with the interest. And what is demand deposit? Example you can keep in mind the savings account. The amount that we have kept in savings and current account is known as demand deposits. So in cases where there is no explicit mandate to renew term deposits, the bank should review such accounts if the customers have not withdrawn the proceeds after maturity or transferred these to their savings current account in order to prevent such deposits from becoming unclaimed. So what are they talking about? So if there is no explicit mandate to renew the term deposit, if any of you might have been, kept their fixed deposit with the bank, most of the fixed deposits nowadays is done through electronic mode. So at that point of time, they ask you for instructions whether at the time of maturity you want your amount to be credited to your savings account or current account or whatever account it is linked to, or you want it to be renewed automatically. So in cases where there is no explicit mandate to renew, so when there is no mandate issued to renew the term deposits, the bank should review such accounts. The bank should continuously reviewing of such accounts should be done if customers have not withdrawn the proceeds after maturity. So keywords, that is, if there is no instructions, with the bank that these term deposits, that is fixed deposits, should be renewed, or the customers have not withdrawn such amount after maturity, then the bank should continuously review such accounts. These are the guidelines over here. Key highlights of the news. Then again, RBI also said banks shall not classify zero balance accounts as inoperative. What is a zero balance account? There was a scheme by the name of Jan Dhan Yojana. Jan Dhan Yojana. If my information is correct, it was introduced in 2014 or maybe I guess so 2015. At that point of time, if we go back in time or understand the banking dynamics over there, उस टाइम पे बैंक अकाउंट खुलवाना ही बहुत बड़ा चैलेंज होता था. That is, bank accounts were, far from the lower sections of the society. So a zero balance scheme was introduced. Even with zero balances, you can open your bank accounts. There are many bank accounts today which have zero balance. So zero balance accounts can also be opened. According to this notification, RBI strictly guides that zero balance accounts, if any accounts has zero balance, this should not simply mean that they are inoperative in nature. If it remains non-operative for a period of more than 2 years, then only you can classify it as what? You can classify it as inoperative as defined. Central and state government have been expressing difficulty in crediting checks, direct benefit transfers, electronic benefit transfers, scholarship amount in these accounts, as they are also classified as inoperative due to non-operative for 2 years. So what they are telling is that ultimately such the Jan Dhan Yojana or zero balance accounts were introduced. Zero balance accounts were introduced so that if there is any type of cash assistance that government wants to provide, that government wants to give, the government wants to give to the poorer sections of the society, then instead of providing them with cash, for example, you can take a simple example of gas cylinders, LPG cylinders. Government used to promote it very much and used to provide subsidies on this. So if government wants to give subsidy in the form of cash assistance to poor sections, then these amounts are directly credited or transferred to such poor section accounts, that is bank accounts, which were introduced with Jan Dhan Yojana. So what they're expressing, what they're trying to say through this notification or clarification is that central government and state governments have been expressing difficulty. भाई उनको दिक्कत हो रही है सेंट्रल और स्टेट गवर्नमेंट को किस बात पे दिक्कत हो रही है कि भाई हम जब पैसा बेचते हैं either through crediting checks, direct benefit, electronic transfer, RTGS, NEFT or something like that in these accounts, if these accounts are classified as inoperative, so ultimately the purpose would not be solved, na? So ultimately there would still be a problem. So that's what they're talking about here. Banks shall ensure that amounts lying in inoperative accounts or unclaimed deposits, both these inoperative accounts and unclaimed deposits, and reactivated will be put under concurrent audit according to the new norms. So all these accounts, that is inoperative accounts one classified, unclaimed deposits one classified, should be reviewed under concurrent audit. So what is concurrent audit? This is a form of banking audit which is done, under which an external auditor is appointed by the banking system, and they do concurrent, that is simultaneous, that is you can say simultaneous checking of accounts. there is simultaneous checking of accounts is done. So imagine there is a bank, there are various employees over there, and the banking system or the RBI appoints an external auditor. There are various forms of auditor, I must say. I must clarify this. If you are talking about auditor or audit, what is this simply? This is basically checking of accounts. What is audit? This is basically checking of accounts. और यहाँ पे ना ऑडिटिंग या ऑडिटर बहुत तरीके के होते हैं, बहुत सारी चेकिंग की रिक्वायरमेंट रहती है. We are not talking about statutory auditors, internal auditors. Concurrent auditors is a different category of auditors, and reactivated will be put under the concurrent audit. That is, the concurrent or external auditor needs to check this and review this. All transactions in these accounts which are reactivated will be monitored regularly for at least 6 months. So all the accounts after being classified as inoperative which are reactivated should also be checked at higher levels without the knowledge of customers and dealing staffs. So ultimately these need to be monitored for at least 6 months. Remember this, these need to be monitored for at least 6 months without the knowledge of customers and dealing staff. The balance in savings and or current account non-operated for 10 years and term deposits not claimed for 10 years from the date of maturity are classified as by banks as unclaimed deposits. So according to this news or according to this guideline, the accounts, current account or saving account, again we understood, and the term deposit, that is fixed deposits not claimed for 10 years or more from the date of maturity are classified as unclaimed deposit. So from a certain date, if it is not claimed for 10 years, 10 years is a lot of time, these amounts are transferred to the Depositor Education and Awareness Fund maintained by the Reserve Bank of India. So ultimately this amount will be used by who? This amount will be used by Reserve Bank of India for the purpose of education of the depositors. So other information, some certain definitions are over here, and the other information is these instructions are issued by section this 35A, 26A and 51, 56 of Banking Regulation Act 1949 and other relevant laws. So definitions are covered. Next we are coming to RBI proposes banks with less than 6% net NPAs to declare dividends. So if I must explain dividends also, so there are two major definitions or two major concepts that we can understand over here. So let me try to take it in a bit detail. So for example, this is a bank. So what is the main purpose of a bank? To take deposits, okay, to take deposits and to advance it as advances or loans. So if you separate everything, अगर आप सब कुछ साइड कर दो, बैंक का मेन पर्पस क्या है? मेन पर्पस ही है भाई, और कोई पर्पस है नहीं बैंक का. बैंक्स मेन पर्पस इज टू एक्सेप्ट डिपॉजिट, पैसा लेना, एंड टू गिव दैट मनी एज एडवांसेस और लोन्स टू वेरियस बिजनेसेस, इंडस्ट्रीज एक्सेट्रा. सो यहाँ से पैसा लिया, यहाँ पैसा देना. सो दीज एडवांसेस और लोन्स आर क्लासिफाइड एज अ एसेट for the banks. So ultimately these advances or loans are what? As these are assets for the bank, and what the bank expects is the businesses or industries to whom the loan has been provided to repay in installments, if it is a case of EMIs, along with interest. They expect that they receive the money back. But many a times, so there is a long process involved in this. Different types of loans and advances are involved, credit limits, OD, etc., etc. There are various types of assets that the bank has. So ultimately the main earning of the bank is through the interest that they are earning over here. So many a times the banks, not many a times, always, हर बारी बैंक लोन देने से पहले, कुछ भी एडवांस देने से पहले 10 बारी चेक करता है. टेक इन ऑल द डॉक्यूमेंटेशन, ऑल द पेपर वर्क, एंड आफ्टर दैट ओनली दे प्रोवाइड द लोन. बट मेनी अ टाइम्स इट हैपन्स इज दैट द बैंक्स डू नॉट गेट द इंस्टॉलमेंट्स, और देर इज अ डिफॉल्ट. You can say there is a default in the payments of EMIs or the installments. There can be cases where there is default. There are defaults for certain period. For example, I forgot to pay my EMI, or I do not have the balance to pay the bank their EMIs. So these are called defaults. And for the RBI says that you have to classify such assets as non-performing assets. So there are various categories that RBI has issued, that after a certain time non-performing and dead investments and so on. But what is non-performing asset as a overall? When your asset, that is in the case of banks, when the loans and advances are not performing or the returns are not being generated, then it is known as non-performing assets. So what we're talking about here is RBI proposes banks with less than 6% NPAs. So those banks who have less than 6% NPA, that is less than is this, less than 6% NPA, this proposal is for them to declare dividends. That is, if you have an NPA of more than 6%, then you cannot declare dividend. What is dividend? Ultimately, banks are also a company. They are also company. Majority of the banks are in company form. There are cooperative banks also and other types of banks also. So these companies have shareholders. So shareholders ultimately expect, who are shareholders? The owner of the company. Who are shareholders? They are the owner of the company. And they expect returns in two forms. They expect returns in two forms. That is, one, the equity share, the value of equity share increase. One is this form they expect, and the other one is they expect dividend. That is the earnings, that is a return that is directly credited to their accounts. So they expect two types of returns. So ultimately, RBI proposes that banks with less than 6% non-performing assets, that is the default rate is very low, to declare dividends. The Reserve Bank of India proposed allowing banks having net non-performing assets ratio of less than 6% to declare dividend. So those those banks that have a very low percentage of NPAs can declare a dividend. As per the prevailing norms last updated in 2005, banks need to have net non-performing asset ratio up to 7% to become eligible for declaration of dividend. So ultimately the norms have been tightened. That is, earlier it was 7%, now it has become 6%. So the norms have been tightened. RBI has proposed that the new guidelines should come into effect with financial year 25 onwards, that is 25-26 onwards, that is this will come into effect 25-26 onwards. The guidelines have been reviewed in the light of implementation of Basel III standards, the revision of prompt corrective action framework, and introduction of differentiated banks. So what happens is, what is Basel III standards? Let me give you a certain small part of overview. So there was, you might be aware of 2007-2009 Lehman Brothers crisis was there, which originated where? It originated in America. It was a total mortgage based, that there was a housing crisis which led to a mortgage crisis, and ultimately the banking system collapsed. It was around in the year 2007, 2008, 2009, 3 years it took up the majority of the economies. उस टाइम पे बहुत बुरा हाल था. मतलब बैंकिंग सिस्टम्स में ये देखा गया कि बैंकिंग सिस्टम्स, financial systems had such major drawbacks that certain new standards were incorporated for the banking or financial systems internationally. Ultimately the reports came. I was reading an article the other day. It showed that the ultimate effect of such crisis led to trillions, not even billions. I'm not talking about billions. I'm talking about trillions of dollars of loss. US dollars, not even rupees. It was around 2 to 3 trillion dollars of loss that took place in the economy around the world due to such, there was such a default that took place. So new norms were introduced. So these new norms are known as Basel III standards that India is also adopting. The revision of prompt corrective action framework and the introduction of differentiated banks. A commercial bank should have a minimum total capacity adequacy of 11.5% to be eligible for declaring dividend, while the same for a small finance bank and payment bank has been set at 15% and 9% for local area banks and regional rural banks. So there are different percentages: 11.5%, 15%, 9% for different categories of banks that has been set up. That is, minimum capital adequacy should be there. Next, in what can be seen as the relaxation of the existing norms, the Reserve Bank has proposed increasing the upper ceiling of dividend payout ratio. So what is dividend payout ratio? Ultimately, dividend payout ratio for the non-commerce background students, it is also known as a DP ratio. That is DPS divided by EPS into 100. Or in simple terms, for example, a company is earning 10 rupees, a company is earning what? 10 rupees, and the company declares a dividend of 6 rupees. A company declares a dividend of how much? 6 rupees. So can we say that ultimately the company is paying out 60% of its earnings? Can we put the wordings like this, that ultimately the company is using or paying out 60% of the earnings? For example, if the company was to be earning 100 rupees, it is paying out 60 rupees out of the 100 rupees. So dividend payout ratio means the amount of dividend, the percentage of dividend of the earnings that is being paid out. So let us read again. The Reserve Bank of India has proposed increasing the upper ceiling of dividend payout, which is the ratio between the amount of dividend payable in a year and the net profit, to 50% if the net NPA is 0. So let us connect the dots. If the net NPA is 0, that is, there is no non-performing asset, all the loans and advances given by the bank is on good terms, then up to 50% of the earnings can be declared as dividend from the earlier ceiling of 40%. The draft also made it clear that the Reserve Bank should not entertain any request for ad hoc dispensation of declaration of dividend. In the case of foreign banks, the RBI has proposed that they may remit the net profit from Indian. There's some key information is covered over here. Next, there's another notification that came. Reserve Bank of India cancels the license of the Faiz Mercantile Cooperative Bank Limited, Nasik, Maharashtra. So this is another bank for which the license had been cancelled. So what is a cooperative bank? First, let us understand the working of a cooperative bank. So there is, yes, about cooperative banks. What are cooperative banks? So what are cooperative banks? Cooperative, ultimately what are normal or company based banks, how they are working in that format. There is a company, there are shareholders of a company, there are shareholders or owners of a company, equity shareholders of a company, who ultimately invest in this company, and they are issued shares of such company. This is a normal format on which banks operate. The other one is cooperative banks. So cooperative bank hota kya hai? Cooperative banks are financial entities owned and operated by their members. So cooperative banks जो उसके मेंबर हैं, जो उसके मेंबर्स हैं, वही उसको ओन एंड ऑपरेट करते हैं. जो उसके मेंबर हैं, मेंबर मतलब मान लीजिए ओनर्स हो गए, यहाँ पे ऑपरेटर्स हो गए, who are both the owners and customers. So the owners are also in this case the customers. But in the normal case, for example, I am a customer of Axis Bank, but that does not mean that I am also a shareholder of Axis Bank. That is a listed company based format. But in a cooperative bank, I am the owner and I am the customer only. They are formed to support financially weaker sections and protect them from high interest money lenders. So ultimately you can say that there are various stakeholders or customers that come together to form a bank, to form an institution that is working like a bank. So a status is given, that is cooperative bank. एक तरीके से बहुत सारे लोग, जैसे इसमें इमेजिन करिए आपके सभी दोस्त हैं, आप एक वीकर सेक्शन से बिलोंग करते हैं, आपको ऐसा लगता है यार किसी दूसरे के पास क्यों जाना, हाई इंटरेस्ट मनी लेंडर्स, इफ वी गो टू देम दे विल एक्सप्लॉइट अस. So what we do is we form a cooperative society, cooperative bank, and we are the ultimately owners and we are the customers only. So they are registered under the Cooperative Societies Act or the Multi-State Cooperative Societies Act 2002. They are regulated by RBI and the governor and governed by Banking Regulation Act 1949 and the Banking Laws Cooperative Societies Act 1955. So there are various types of cooperatives you can see over here. There is urban cooperative banks, rural cooperative banks operated in urban and semi-urban areas. For example, Delhi NCR, this is urban category. Rural areas can be a village, agricultural areas. So UCB, what is UCB? Urban cooperative banks are further divided into scheduled and non-scheduled commercial banks. Just one second. So urban commercial cooperative banks are further divided into scheduled and non-scheduled UCBs. The RCBs, that is rural cooperative banks, are divided into state cooperative, district, central, and these. So there are various categories of cooperative banks. You can see this. We would be talking about this again. Let us come back to the circular that was there. Next, again, Reserve Bank of India cancels the license of the Fiaz Mercantile Cooperative Bank, Nasik, Maharashtra. The Reserve Bank of India cancelled the license of Fiaz Mercantile Cooperative Bank Limited, Nasik, Maharashtra. So what happened is the banks does not have adequate capital and earning prospects. So ultimately, what the Reserve Bank of India sees is that the bank is not, having solvency or adequacy of their capital to sustain it in the future. If the bank finds that the capital is not adequate, or the bank thinks that the future sustainability of the bank, cooperative bank, is not there, then the bank can take then the RBI can take suitable actions. As such, it does not comply with the provisions of section 11 subsection 1 and section 22 subsection 3 clause D, read with section 56 of the Banking Regulation Act 1949. So it is saying that the cooperative bank did not comply with these sections, due to which cancellation of their license can be done. The Reserve Bank of India also cancelled the license of Musiri Urban Cooperative Bank Limited, that is Musiri, Tamil Nadu. So in any case, you can understand, if the proper adequate provisions are not followed, if the law is completely not followed, then RBI can intervene. The bank has failed to comply with the requirements of section 22 subsection 3 clause A, 22 subsection 3 clause B, clause C, clause D, and clause E, read with section 56 of Banking Regulation Act 1949. So ultimately, Banking Regulation Act gives the right to the Reserve Bank of India. Next is RBI enhances bulk deposit limit for large UCBs, that is urban cooperative banks, to 1 crore and above. So ultimately, the large UCBs, that the urban cooperative banks, can accept bulk deposits of 1 crore and above. Let me share with you the definition, the existing definition. First, does the existing definition say? In these directions, unless the context otherwise requires, the term herein shall bear the meaning assigned to them. That is, what is the meaning of bulk deposit? Or I can say, what was the meaning of bulk deposit? Means single rupee term deposits of rupees 15 lakh or above. So earlier, the term deposits or bulk deposits was defined as 15 lakhs. Now it has been revised as, let me go there, here, single rupee term deposits of rupees 1 crore and above for scheduled UCBs, that is urban cooperative banks, that is characterized as tier 3 and tier 4 UCBs. So ultimately, there are various categories also. You can see over here, the UCBs have been classified. What is again UCB? We are saying UCB, urban cooperative banks. This is the limit of 1 crore is introduced for UCBs. As I mentioned earlier also, there are two categories, UCB and RCBs. Don't take it as cricket team. जी cricket team नहीं है भाई. UCB, RCB आप ले लेके वैसे खेल रहे हो नहीं. UCB, RCB, urban, rural. ठीक है ना? Cooperative banks. So urban cooperative banks, what we're talking about, urban cooperative banks, they have various tier 1, tier 2, tier 3, tier 4. So different categories of different categories of UCBs are there. So ultimately, what they're talking about here is the limit is for tier 3 and tier 4 UCBs. Tier 3 and tier 4 UCBs. UCBs with deposits between 1000 crore and 10,000 crores. So ultimately those cooperative, urban cooperative banks which have a deposit of 1000 crore to 10,000 crores and UCBs with deposits above 10,000 crores, these are known as Tier 3 and Tier 4. So ultimately single rupee term deposits 1 crore is allowed for UCBs for Tier 3 and Tier 4 under the revised regulatory framework. And again there is second clause also, second you can say clause, sub clause also. Single rupee term deposits of 15 lakh and above for all other cooperative banks, that is other than scheduled UCBs Tier 1, Tier 3 and Tier 4. So ultimately they have classified into two categories. Let me broadly classify it. What they have done is they have classified into majorly two categories. UCB, if you fall in UCB Tier 3, Tier 4. If you fall in UCB Tier 3, Tier 4, then 1 crore, and all others, it is still 15 lakh for you. So ultimately they are talking about this only. The Reserve Bank of India has decided to enhance the bulk deposit limit for large UCBs. What is large UCBs? That is Tier 3, Tier 4 to 1 crore and above from the current, this is not 115, this is a misprint, from current 15 lakhs and above. Specifically, the new bulk deposit limit applies to this. Again we have covered this. What is Tier 3, Tier 4? We have covered this. RBI said all other UCBs, it is still 15 lakh. We have already covered this. See, again we have covered this. All this we have covered from here, the definition. Then we have covered what is Tier 3, Tier 4. Then we have covered the definition of what is cooperative banks, various categories of cooperative banks. Again, there are state cooperative banks, there are district central cooperative banks. Certain theories over here operate at state level. Those cooperative banks that operate at a state-wide level are known as state cooperative banks, and you can guess by the name itself what are district cooperative banks that are operating at a district level. For example, a cooperative bank operating at a UP level, state cooperative bank, and in UP this is Gautam Budh Nagar. So Gautam Budh Nagar, that is a district, understanding? So it operates at a district level, serve as an intermediary between state and primary agricultural credit societies. Again, these have certain different functions. These are different levels. UP level, state cooperative, then Gautam Budh Nagar, this is a district level, and there can be local level credit societies also. Again, primary agriculture credit societies are there. Again, let me put it in such a way that you can easily pick it up. State cooperative bank, okay, then there is district cooperative bank, then there is PACS, that is primary agricultural credit society, is the smallest cooperative credit institution, operates at grassroots level, that is even below the district level, that is Gautam Budh Nagar. Even below that, certain local, it is covering local villages, and directly interact with farmers, providing them with credit and other financial services. Next, RBI directs issuers. This is another notification. The next notification that we are talking about here is RBI directs issuers to specify utilization of funds raised via NCDs, CPs. So there are two definite terms that we are talking about here is commercial papers and non-convertible debenture. So if we put it in a straight manner, so what happens is the corporates, this is the public, जनता है भाई, ये जनता, समझ रहे हो? So corporates you can say, or companies, in simple language, companies, ultimately they issue, what they are doing is they are issuing securities, different categories of securities, and they are raising money. Okay, so for example, I am a company, I am saying that people, this is a event, I will issue you securities, मैं आपको security दूंगा. Security मतलब bond, debenture and papers, commercial papers we are talking about, a different type of securities I will give you. Give me your money, I will ultimately give you, along with your security, I will give you every year certain amount of, let's say, interest, 7%, 10% and so on. So ultimately public will give money or subscribe or they will what? They will subscribe to such securities. Then public will give you the money. Then public will give me the money. So ultimately, I will use this for a certain purpose. For example, let's say I had declared that I will be using this money. Just a second. I will be using this money to construct a factory. And by constructing the factory, I will be running the business. I will be earning profits, out of which I will give you the interest or the return that I have promised you. So ultimately, what the RBI is telling over here is the RBI has tweaked norms for issuance of commercial papers. These are another category of securities usually issued by companies or corporates. These are unsecured. That is, there is no security backing and are for short-term purposes. Ultimately, the basic structure is like this only. I am a company, I will give you a security, I will issue a bond and I will take your money. I will give you back the money after a certain time along with interest annually. It can be on maturity. There are various types of deep discount bonds, etc., etc. So this specific notification is for commercial papers and non-convertible debentures. That is, I will issue you debentures, I will take your money, I will give you interest along with the on maturity, I will give you the principal also. So again, RBI has tweaked norms for issuance of commercial papers and non-convertible debentures of up to 1 year to regulate short-term investments and ensure transparency in the market. So what they're talking about here is one of the key changes slates to take effect from 1st April this year was that the guidelines mandate issuers, that is the corporates, companies or certain organizations who are ultimately raising the fund. This is what is issuer? Those people who are raising the funds. Those people who are raising the funds. These guidelines are for them to mention the exact end use of the funds raised through the instruments. So what is the purpose? मैंने आपसे पैसा ले लिया भाई, यही नहीं बता रहा कि कहाँ इस्तेमाल होगा. तो एक तरीके से मैं आपको हो सकता है ना, I might it might be end up in a very bad position for you. What is the exact purpose of the funds being raised? This should be done so that there is better transparency. Issuers are now required to disclose long-term and unaccepted credit ratings in the offer documents also. So in the offer documents, they have to disclose what is the offer document. When they are issuing, they will offer you. They are prospectus. Basically, this is a prospectus. Prospectus पे लिखा होगा ना, prospectus पे everything is written कि भाई आपका पैसा, when will I give you interest, what is the interest rate, कब you will get the return, when is the maturity time, कहाँ पैसा इस्तेमाल होगा, कितने time बाद you will get the money back, and so on. So they are giving guidelines on this, that the issuer should exactly tell what is the purpose, what is the end use, what is the end use. This information helps investor make informed decision about the risk associated with investment, said market participants. Next, again the settlement period was capped to T+4, which means transaction needs to be settled within 4 days from trade day. In the case of individuals and HUF, were restricted to investing a maximum 25% of their total income. Again, these are certain guidelines that are issued. Individuals, HUF, Hindu undivided family, if you might be aware, these are separate legal entity that is allowed to be created by the government. There is a law on it. So they are telling that guidelines 25% of their total income they cannot invest beyond that. Guidelines specify the redemption, that is repayment of invested amount. So how redemption needs to be done? Redemption meaning repayment. In simple terms, repayment of the invested amount need to be made before 3 PM on the maturity date. Next, there are certain waivers that came. RBI waives 5 crore penalty imposed on Bank of Baroda over shortfall in soiled notes. Soiled notes. What is soiled notes? The definition I must have put over here. No. So soiled notes. What is soiled notes ultimately? RBI wants that the notes or the currency notes that have been issued should be of a certain quality. Not that people are writing on the notes. Notes पे लिखा होता है ना कि भैया Pinky loves this, Pinky loves that, Bunty bubbly types. No, they want proper notes. So soiled notes collected by the banks, if they are not of certain category, need to be again, these should be cancelled or reported to the Reserve Bank of India. So Bank of Baroda said the Reserve Bank of India has decided to waive 5 crore penalty that was previously imposed on it due to shortfall in soiled notes remittances. The penalty was attributed to shortfall in the soiled notes. Again, the soiled notes, those notes which are not of certain category, remittances, indicating issues with handling of notes that had undergone normal wear and tear. Normal wear and tear, or ultimately the quality of notes is not, currency notes is not up to the power. The penalties imposed by Reserve Bank of India align with its clean note policy, a stringent framework necessitating the immediate imposition of penalties upon identifying deficiencies in soiled note remittances or chest balance, irrespective of the quantity involved. So there is this policy that they followed, clean note policy, nothing major announcement coming from here. Next, RBI imposes fine on Dhanlakshmi Bank, ESAF, Small Finance Bank, Punjab and Sindh over non-compliances. So RBI has imposed monetary penalties against these banks over various non-compliances. So these non-compliances can be varying. So let us study about this. A penalty of 1.2 crore has been slapped on Dhanlakshmi Bank. This is the key point for non-compliance with certain directions of this KYC, that is know your customer. Major updations were not there. What is KYC? In recent times you must have observed the banks, while opening a bank account or applying for anything, bank requires a lot of your documents. These documents can be what? These documents can be Aadhaar card, PAN card, your past 3 years ITR and so on. So these can be various KYC documents. So due to non-compliance of various things, penalty has been imposed. These are the provisions under section 47 subsection 1 clause C read with section 46 subsection 4 clause I of the Banking Regulation Act 1949. Next, further a fine of 1 crore has been imposed on who? Punjab and Sindh Bank for non-compliance with again loans and advances, statutory and other restrictions. The central bank imposed a penalty of 29.55 lakh. So these are basically statistics that they're telling about, that these amount of penalties have been imposed on different banks. भाई ये penalty लगा, अलग अलग चीज़ों के लिए आप मान ही नहीं रहे हो, मानोगे नहीं तो भाई आप पे लगेगा ना penalty. तो RBI has done that only. The RBI said that the actions against these banks were taken based on deficiencies in regulatory compliances. What is deficiencies? Ultimately, there is a gap. RBI requires there a certain amount of safety or the following of rules and regulations, which these banks are not doing. So ultimately, what they do is they are imposing penalties and are not intended to pronounce upon the validity of any transactions or agreement entered into by the bank with its customer. Earlier on 11 January, RBI decided to waive 5 crore penalty. Again, this we have discussed. Bank of Baroda, they have waived it off. RBI releases draft norms for fintech self-regulatory organization. So what is fintech? Finance and technology. So you can say finance plus technology based organizations. So just like we are operating in edtech. What is edtech? Edtech meaning education and technology based company. Similarly, there are fintech companies also, that is finance and technology based. So ultimately, this draft of norms have come for such companies, such organizations. The Reserve Bank of India drafts norms for self-regulatory organizations for fintech sector, that is SROFT. SROFT have proposed that such entities should have robust IT infrastructure and the ability to deploy technological solutions within a reasonable time frame. So what we're talking about here is, the application for such an entity should have sufficient net worth. Entities to apply for fintech company or certain financial solutions should have a certain minimum amount of net worth. What is net worth? Net worth is the ultimately it is calculated through a formula, that is assets minus the liabilities. So those companies that are having a certain net worth and demonstrate the capacity of establishing the necessary infrastructure to fulfill the responsibility of this effectively, the RBI said, the draft framework said that to maintain credibility, the SROFT should operate independently, free from influence of any single member or group of members. So you can say that is a fintech company which wants to operate this is SROFT, self-regulatory fintech organization. So ultimately these should have a specified amount of net worth and demonstrate the capacity to handle necessary infrastructure. The SRO, self-regulatory organization, should be set up as non-profit organizations. That is, the objective of such company should not be earning profits. Ultimately, if the purpose is earning profits, it is just equivalent to a normal company registered under Section 8 of Companies Act 2013. All the NPOs, non-profit organizations, are registered under Section 8 of Companies Act 13. The norm said the applicants should represent the fintech sector with membership across entities of all size, stages and activities. If representation is inadequate at the time of application, the application should include a roadmap of achieving this within a reasonable timeline. So ultimately applications shall be received by the RBI, and if the applications do not represent, if the applications are rejected by, कभी कभार क्या होता है कि adequate नहीं है, these are rejected, so roadmap should also be provided. The draft norms left it to the sector to decide whether there should be one SRO for fintech or multiple self-regulatory organizations for fintech sector. So with this we come to the end of this session. Thank you so much. Meet you in the next session. Just one second. Meet you in the next session. Thank you so much. Bye bye.